Welcome back, everybody. A week from today, Nvidia reports earnings, and it will no doubt be a huge market event, with a lot of people wanting to see if their growth story is going to continue because Nvidia has beat earnings estimates by double digits the last 4 quarters in a row. But they're an over $2 trillion company now, so that can't possibly continue, right? Well, in this video, we're going to go over the latest in Nvidia's business, talk about what's been going on with their customers and competitors, and break down what I expect to hear from earnings next week. So let's go ahead and get started. Now, I don't know if you can hear this little bird that just will not stop chirping in the background, but apparently he's upset about something and we're just going to have to go with it. Let's talk about the latest with Nvidia's business. Now, I talked a lot about the basics of their business in my original analysis video a couple months back, so I'm not going to rehash all that. But I'll link that video down in the description and at the end of this video if you want to go back and see it. And around that time, Nvidia had just had their GTC conference where they announced their next generation GPUs called Blackwell, with the idea being that they'd be able to provide more compute power at up to 25x less cost and energy consumption as before. And I think the main point I get when I look at their roadmap is here's a company that has the best product in the market, and they're just constantly trying to push for material improvements on a multi-year timeline to keep that advantage going as long as possible, which is pretty much what anybody would do. But specifically for Nvidia, they're betting that AI and the computing needed for AI is going to be a long-term transition. And this idea is one that analysts have talked about for a while.
You have some interesting stats. So you say because of AI, we're going to see a huge replacement cycle, more than $1 trillion for data centers alone. Explain to me what kind of stocks are going to benefit from this replacement cycle when it comes to artificial intelligence?
Absolutely. So, what the key message from earnings season so far has been that demand for AI infrastructure is not going away. We've seen this in the hyperscaler capex numbers. These were sensational numbers. Meta, Microsoft, Google, they collectively increased their capex expectations for the year by $10 billion in just Q1. Now, this elevated capex spend is a major support for the growth runway for leading companies in AI infrastructure. So Nvidia, the most obvious example here.
And that's part of what I really think is exciting about Nvidia's outlook. At this point, what they have available is a GH200, otherwise known as the Grace Hopper 200 CPU and GPU superchip. But they already have the GB200 or the Grace Blackwell set to release before the end of 2024, ideally, with the next generation set to release, in theory, in 2025, which of course all comes with Nvidia's overall toolkit and platform that developers know already. And this to me is Nvidia really setting themselves up to be the provider of choice for the foreseeable future, especially as our customers ramp up their spend on CapEx and AI infrastructure, which we're going to talk about here in a minute. Now, obviously, just because they have a roadmap doesn't mean it's going to actually happen the way that they planned or that the demand is going to remain as high as it's been. And because there tends to be a lag between when a customer orders their GPUs and when they're actually delivered, there's always things that can happen in between, like delays or issues in production, or the customer could get into a situation where they don't want the order anymore or they're not able to pay anymore. So it's obviously not as easy as just looking at this timeline and saying it's a slam dunk. But let's talk about the news that's been coming out around Nvidia that can give us a little bit of insight on where that demand is. Now, first off, even in the press release for their Blackwell GPU, they specifically say among the many organizations expected to adopt Blackwell are AWS, Dell, Google, Meta, Microsoft, OpenAI, Oracle, and Tesla. And if you scroll down a bit more, you see testimonials from all the leaders of these companies. You have Sundar Pichai of Google. We look forward to bringing the breakthrough capabilities of the Blackwell GPU to our cloud customers. Andy Jassy of Amazon, AWS is the best place for anyone to run NVIDIA GPUs in the cloud. Zuckerberg, we're looking forward to using NVIDIA's Blackwell to help train our models and build the next generation of Meta AI. And even Satya Nadella, we're committed to offering our customers the most advanced infrastructure by bringing Grace Blackwell to our data centers. And the list goes on and on. Now, does this sound like these companies are slowing down their spend with Nvidia? To me, it definitely doesn't, but you don't have to take my word for it. You can simply just listen to what they said on their most recent earnings calls. Because Amazon said, we anticipate our overall capex to meaningfully increase year over year in 2024, primarily driven by higher infrastructure capex to support growth in AWS, including generative AI. And Meta said, we're increasing capex as we continue to accelerate our infrastructure investments to support our AI roadmap. We expect capex to continue to increase next year as well as we invest aggressively to support our ambitious AI research and product development efforts. And then Microsoft, when they were asked about their CapEx spend, given that we want to be a leader in this big generational shift and paradigm shift in technology, we want to be able to allocate the capital required to essentially be training these large foundational models and stay on the leadership position there. And then lastly, with Google, the significant year-on-year growth in CapEx in recent quarters reflects our confidence in the opportunities offered by AI across our business. Looking ahead, we expect quarterly CapEx throughout the year to be roughly at or above the level of Q1. So obviously, all the big tech companies are ramping up, and we can see that in this graphic. When added together, the expectation is for a close to 50% increase over last year, with then another 10% increase on top of that in 2025. And that's why some analysts think expectations for Nvidia actually may be lower than reality.
So I want to play the other side of this. Is it possibly undervalued? We just saw the reports from some of those Mag 7 companies. When you look at a Microsoft, the way it's increased its CapEx and guiding for even more CapEx spending, also a Meta and an Amazon, we don't even know where this CapEx spending could possibly hit a ceiling. Is it possibly undervalued with the kind of money that so many of these companies are willing to spend to upgrade and get AI capabilities?
It's so easy to say that it's not undervalued, but then every time Nvidia reports earnings, it turns out to be hugely undervalued and the stock surges because they've been making so much more money than Wall Street expected. We think they're probably running out of room in terms of crushing the numbers to the extent that they have over the last few quarters. So I wouldn't call it, wildly undervalued. I think it's undervalued if you're a patient investor. You're looking at a year, 2 years. I think you could make very healthy returns. You can beat the S&P. So from that perspective, it's undervalued. But relative to the explosive move that we've seen in the last year or two, where the stock is up like 4 or 5 times, I don't think people should expect that kind of upside, over the next couple of years.
But in addition to big tech talking about their increased spending on AI and NVIDIA's next-gen chip having support from all the leaders in the space, we can also look to their critical partner, TSMC, for some insight on how they might be doing. Because Taiwan Semiconductor reported earnings already and had a very good outlook for the AI processors going forward, saying almost all of the AI innovators are working with TSMC to address the insatiable AI-related demand for energy-efficient computing power. We forecast the revenue contribution from several AI processors to more than double this year. And for the next 5 years, we forecast it to grow at a 50% CAGR. Now, obviously, TSMC works with everyone, not just Nvidia, but that news probably bodes very well for them no matter what. And there's some analysts that agree.
So, Claire, I feel like you might be watching this show because you also gave us a list of underappreciated tech names. So one of them is one that we spoke about on the show quite a bit yesterday. I'm going to give you the whole list. Tesla, which is surprising to think it's underappreciated, but TSMC, and the last one's Nvidia. So we talked quite a bit about on the show yesterday. Is it overvalued? Is it undervalued? It sounds like you think it's actually undervalued, even though it's trading, according to our system, 37 times forward earnings. We had a guest yesterday correct us and say it's actually 31 times forward earnings. Either way, quite a premium over the S&P that trades at 20 times.
So I have around 35 times forward earnings. But I mean, the key point is that Nvidia is still trading on more or less the similar multiple as it was this time last year, because the fundamentals of this company continue to move ahead of the stock price.
But who's not appreciating it?
So the market is pricing in for 2024 85% revenue growth. Now, we think that this is conservative. If you take TSMC's revenue guide for their AI-related processors, they're saying that this is going to double this year. Now, that's very significant because this is a very conservative management team. But TSMC probably have the most visibility of anyone on NVIDIA's revenue streams because they see the orders first. So if you apply this guide to NVIDIA's data center business, and even if you factor in a 5 to 10% market share loss to AMD, you get to a revenue growth rate of comfortably above 100% for the year. So we think the market is really underappreciating this AI build-out. NVIDIA is leading on product innovation velocity. Competitors are finding it very hard to catch up.
So your underline is that NVIDIA is actually undervalued.
Yes.
And then just real quickly, if we look at some of NVIDIA's competition, Intel still seems to be struggling to turn it around and become a legit competitor. While AMD largely reported earnings that were good, and as expected, their updated data center GPU guidance for 2024 was at about $4 billion, which was a nice increase for them, but still pales in comparison to what Nvidia is doing.
Every company, including the hyperscalers themselves, they want to make the chips that go into these data centers to power AI. How big is Nvidia's moat right now? How much longer do you see it lasting? Are there any rising competitors? For example, is an AMD, is it a rising competitor?
Sure. Well, I think with NVIDIA, certainly the moat is still pretty wide. That's what's been so amazing with this huge opportunity growing so quickly. They're still garnering, over 80% of these data center GPU chip sales. The biggest challenge they have is that everyone wants the latest and greatest NVIDIA chip. So the N100, it's not going to be coming out until next year. They've talked about Blackwell. So it's really about them being able to make the chips as fast as people want them in terms of innovating quickly enough, and then supply chain issues. So it's really, the demand is extremely strong for NVIDIA. All the issues around how much they can monetize that and how much revenue they can squeeze out of that are around how quickly they can meet that demand, especially around potential supply chain snags. In terms of competitors, I mean, we just got guidance on data center from AMD when they reported earnings about a week ago. They're guiding to something like $4 or $5 billion for next year. To put that in perspective, NVIDIA is doing, 80 billion. So AMD's a great company. They play in a lot of other places besides the data center, like the PCs, for example, where you don't see NVIDIA having nearly as big of a footprint. So it's a broader based company, but in the data center GPU market, they're still a very distant competitor to NVIDIA.
Okay, so what's the story with all this? Nvidia has this combination of being the best product in a nascent industry, with a moat that continues to be strong versus the competition, where their customer base who needs that product are the most profitable and financially strong companies in the world, who view that industry as absolutely critical for their long-term success. So while expectations for Nvidia are super high and their valuation is high, that fact is why I felt comfortable starting my position even at these prices. Because people will say, yeah, but everyone's building their own chips to reduce costs and Nvidia is going to be dead. But my response to that is, which one of these big tech companies are willing to risk losing out on a potential advantage in AI just to cut costs in 2024 or 2025? The answer is going to be none of them. And yeah, Amazon, Microsoft, and Google all talked about their own chips as well, but I imagine at most investment in their own chips is going to be in addition to whatever money they're planning to spend with Nvidia, not a replacement for it, at least not yet. Because again, these are the most financially strong companies in the market. Yes, they want to do well and they want to be prudent for shareholders, but they're not going to risk their future for it, and I think that's how they view it. Because for example, Amazon, are they willing to risk AWS market share just to cut more costs? Or even Microsoft, same thing. Are they willing to risk Azure market share when their competitors are going to be using NVIDIA chips? Are they willing to let their OpenAI investment become a second best of whatever it's going to be? Or what about Google? Same thing. Are they willing to risk Google Cloud market share, or are they willing to risk Google Search market share due to competitors building a better LLM product? And that's why I think this idea of, there's cheaper chips coming, so everyone's going to move off NVIDIA is a little bit short-sighted. Maybe eventually when things are more stable or the ROI about AI investments a little bit more clear, but as of right now, there's no reason for these companies to back off because they have the money, they believe it's critical to their future, and NVIDIA has the best product. And what they said on their earnings calls did nothing to convince me otherwise.
And I realize we're all going to lose the people we love. That's the way it is. But not me. Not right now. Because the person I love the most is standing right here. And I'm not ready to lose you yet. Okay,
so then what should we expect with NVIDIA's earnings next week? NVIDIA had revenue guidance of $24 billion for the upcoming quarter, plus or minus 2%. And in terms of how they've been doing versus their guidance, last quarter they had revenue guidance of $20 billion and had actuals of $22 billion. The quarter before that, they had guidance of $16 billion and actuals of $18 billion. And then the quarter before that, they had guidance of $11 billion and actuals of $13.5 billion. And then a year ago, they had guidance of $6.5 billion and actuals of $7 billion. So if the last year of history is any guide, Nvidia may end up with revenue around $26 billion or so. But in addition to revenue, gross margin has been a big story with Nvidia, improving from 63% a year ago to 76% this past quarter, and they expect that to be slightly up as well for this coming quarter. So putting this all together, here are my thoughts. The reality is, if Nvidia has any missteps in their quarter, whether that's their revenue comes in lower than expected, their margins are worse than expected, or even their future guidance is just weaker than people expect, then it's likely going to drop and probably drop by a lot. And that's just because expectations are so high. Because evaluation using traditional methods, even though it's better than it was a year ago, it's still high compared to a lot of the other things out there. So of course, there's a chance that the stock tanks if something comes out that people just don't like. But when I look at the company's business, I look at who their customers are, and I look at where we're at kind of in this AI journey, I just have so much confidence and conviction that Nvidia is going to be a very good long-term investment. Now, is it going to be up 4x or 5x like it has been? No, probably not, because it's a $2 trillion company. But can it be a 25 to 30% gainer a year for the next 3 to 5, outpacing the broader market? Yeah, possibly. And so for me, this isn't a case where I say, oh, I'm going to buy Nvidia and it's going to 5x again and it's going to be my big win. I'm just saying, man, I look at this business, I look at the outlook for the future, and it just makes too much sense not to be in this company. And I think sometimes we tend to overthink things due to valuation. Because people will say, Nvidia is up big, so I need a semiconductor stock, and I'll just go buy Intel because it's cheaper and it's in the same industry. But it's nowhere near the same level of company. It might be eventually one day, and maybe they'll turn it around and it'll be some huge winner, but that's not the same investment thesis as it is with Nvidia. The Nvidia investment thesis is this is the premier provider to the richest companies in the world in a nascent industry that's just getting started. And until any of those things change, I feel really good about it. That's not the same thing as saying I'm going to buy this cheap semiconductor stock like Intel and I'm going to hope that they turn it around so it becomes a big winner. That's not the same. And let me show you what I mean. If you look at my portfolio, none of them are actually turnaround stories. All of them are market leaders or close to market leaders who have been performing well, because I'd rather attach myself to winners who I think are going to keep winning to get above average returns. And that's as opposed to finding a diamond in the rough turnaround that's going to give me amazing returns, but the other 5 turnarounds that I bought didn't do anything. And there's nothing wrong with buying turnarounds. It's just a different investment style, a different thesis than it is to say, here's a company that's winning, they're the market leader, and I think they're going to keep winning. So anyway, that's my thoughts on Nvidia and their upcoming earnings, and I think they may surprise some people with their growth story continuing. But as we all know, the market's going to do whatever the market wants to do, and it's impossible to predict. So we'll just have to see what happens. So what do you all think is going to happen with Nvidia's earnings coming up? Let me know down in the comments below. Now, if you missed my original Nvidia video and you want to see the detailed analysis I did of when I added it to my portfolio, click on this video right here. Hope you guys have a great day out there. Financial independence is true freedom. So keep building and stacking wins, and I'll see you on the next one. Peace.